Hey folks, welcome back to the channel. It's Liquid here, and last week I talked about how the stock market may react to the Fed's rate cut. And in that video I said if they do a 0.5 cut, then this green line is likely going to be the trajectory of the stock market based on what we've seen in the past. And if they cut by 0.25, then this blue line is what's likely going to happen. So they did cut by 0.5%, and in the two times that this happened in the past, the stock market rallied for a few weeks, and then there was a major correction. Looking at the SPY daily chart, I put out the video on Monday, the interest rate announcement was Wednesday, and so far it does look like the market is going up. And like previous situations where the first rate cut was 0.5, the market did go to all-time highs, breaking the previous high back in July. Since it is following the pattern as expected, I would expect the market to continue chopping and going upwards for a couple of weeks, and then we'll probably see a big correction afterwards. Now, history doesn't always repeat itself. So as of right now, all we can say is that the momentum is still bullish. And at least for the next couple of weeks, I would expect the market to continue going higher. And the technicals pretty much tell us the same thing. The price is above the short and long-term moving averages, indicated by these colored lines. And you can see for the most part, if it's above the green 9 EMA, then that tends to lead to higher prices over time. And if the green EMA acts as resistance, then every time it bounces off of that, it's likely going to go lower. So at least short term, this is still an uptrend. We just broke the previous resistance over here. On the last day, Friday, we had a green candle with a long bottom wick. So this suggests the market went down for the day, but ultimately bounced to end the day higher, which is bullish going into next week. RSI is at 61.7, showing relative strength moving upward. The MACD, also a momentum indicator, just had a positive cross over the signal line last week, and the solid green candles suggest the market should continue going upwards. The only bearish sign I could see here is this evening star the market put in on Thursday. Because the two trading days next to it are lower, this doji could be potentially a turning point and the start of a downtrend. Now, whether we get that or not will ultimately depend on the price action. So to confirm that this is indeed the start of a larger downtrend, the price has to break below the 9 EMA and then ultimately the 21 EMA, this blue line here. But if next week we just come down and then bounce around and continue going higher, then the market will continue to remain bullish. So I wouldn't bet bearish right now just because of one signal. I would want to see what the price action does in this coming week. So the first support that has to get broken is 565.15 because that was the low of the previous day. If that is broken, then the price should go all the way down to 568.8 because that was a previous demand area. If it bounces off of that, we're probably going to head higher. If it goes below that, we're probably going to head lower. So 560 really is the area where the bulls and the bears have to fight it out to determine the next large move in the market. Of course, it could just continue going up from here, but because we've already had a long upward channel going here, I wouldn't be surprised if there was a slight pullback next week, which may catch some people off guard. But again, just look at the price action, and it's really important to be patient at this time because, like I mentioned before, it does feel like the market is topping out, which can be a very unpredictable time if you are trying to make short-term gains in the market. So that's it for the SPY overall. I'll put out another video in a couple of days for TLT. Some of you are asking an analysis on that because when interest rates go lower like they're doing right now, then long-term treasuries should perform really well, and the market was already anticipating the rate cut last week, so that's why we've been seeing TLT doing really well. And I would expect this to continue to do so, but there are other bond funds that might perform better over the next few months, and I'll talk about that in the TLT analysis video. So thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.